Hi guys, welcome back to Forex technical analysis for swing trading. Last few months I haven't made any videos because market has been consistently going down. USD has been weak, so there wasn't much to update. But just as of today and yesterday, the trend has reversed. Now it's a perfect time to position ourselves for buying USD, and the trend has reversed. So now it's a perfect time to make a video and keep positioning in a good place. Okay, so let's start with the USD index chart, and here we have the market behaving consistently above the blue moving average line. In other words, USD is getting stronger and USD index chart has an uptrend. So basically, I'm expecting the market to go up like this since the market is continuously behaving above the blue moving average line. So market should up, then retrace, then keep going up like this. In other words, USD is getting stronger and we're gonna look for opportunities to buy USD. Okay, let's write it down. Today is May 12th, Monday. USD index trend is up and our decision is to look for opportunities to buy USD. Okay, now let's analyze each forex pair individually. So first we have USD Japan Yen. So we have the market going up like this, up, retracement up, and we have the really nice up leg forming up right now. So we're gonna wait for market to retrace into a good zone, at least a 50 to 60% zone here. Then it would be a perfect opportunity to buy USD Japan Yen. If that is the case, I'm gonna set my stop loss below the local minimum here, set my take profit at the Fibonacci extension 1.618 up here, and your risk and reward ratio would be about 1 to 2 to 1 to 3. Okay, so let's write it down. For USD Japan Yen, trend is up, leg height is nice. Our decision is to market to retrace at least 50%. So currently I had the sell positions open as of yesterday on USD Japan Yen. Now the trend has reversed and it hit the stop loss. I lost about the 0.1% of my account, which was calculated and exactly according to the plan, and that was really good execution on my part. So that's why I signified here perfect execution. So once again, the losing is a part of the trading, guys. You guys have to accept that. As long as your profit and losses are calculated and your plan, your trading system is perfectly executed, that's a way for long-term game. So even though my stop losses hit and I lost the 1% of my account, it was calculated according to my system. That's why I highlighted it as a green, and it was a perfect execution on my side. Very good. Okay, next pair, USD Canada Dollar Loonie. So we have the market once again originally had the long downtrend continuing up last few months. Then as of yesterday, trend has returned, reversed, and we have the market consistently behaving above the blue moving average line. So in other words, trend is up. So we expect the market to go up, retrace, go up, retrace, and continue to go up like this. So right now we have the nice up leg. We wait the market to retrace into a good zone, at least 50 to 60% zone here, then we would start buying USD Canada dollar. So if that is the case, I will set my stop loss below the local minimum. I'll set my take profit at the Fibonacci extension 1.618 up there. Your risk and reward ratio would be about 1 to 2, around 1 to 3. So let's write it down. USD Canada dollar trend is up, leg size is nice, perfect, and our decision is to wait at least the 50% retracement. Okay, USD shifts franc. So once again, the same story. Last several months, market has been behaving consistently below the blue moving average line. We have been successfully selling USD. Then as of yesterday, trend has reversed and now we have the market consistently behaving above the blue moving average line. So we have the nice up leg, retracement, up leg. Now we expect the market to retrace. If the market retraces at least the 50 to 60% good zone here, then we would start buying USD. So once again, if that is the case, I'll set my stop loss below the local minimum here. I'll set my take profit at the 1.618 up there. So until that, we just need to wait until market retraces into good zone. So let's write it down. USD Canada dollar, USD shifts franc, trend is up, leg size is nice, leg size is nice, leg size is nice, and our decision is to wait 50% retracement. So let's compare these leg sides with the other directional legs. It's not too big, it's not too small, it's just a normally observed leg size. That's why I call it nice. Okay, next pair, pound USD. So here once again we have market behaving consistently below the blue moving average line. In other words, trend is now down, and as of today trend has reversed. And last few months, as you guys can see, pound USD has been consistently behaving above the blue moving average line. Pound USD was weak against pound, but as of today trend has reversed. So we have the nice down leg like this. If the market retraces at least the 50 to 60% zone here, then I would start selling pound USD. In other words, we are buying USD against Great Britain pound. So right now the best decision is to wait until market retraces into good zone. Okay, Euro USD. So once again the same story. So we have the nice down leg forming currently, original down leg, retracement, down leg. Now we expect the market to retrace at least the 50 to 60% good zone here. Then I will set my stop loss above the local maximum, and I'll set my take profit at the Fibonacci extension 1.618 down here. So until that, we will wait market to retrace into a good zone. So Euro USD trend is down, leg size is nice. Our decision is to wait 50% retracement. Okay, Aussie. So here in the case of Aussie, we have market behaving consistently above the blue moving average line. Then market seems to be faking out a little bit. Original trend is considered still up because there isn't much candles behaving below the blue moving average line, right? So at this point, according to my system, that is a fake out. Original trend in Aussie is still up. In other words, USD is weak against Australian dollar. So let's write it down. Aussie trend is up, fake out. In other words, USD is weak against the Aussie, but our USD index is saying that USD is strong overall, right? Since we have conflicting stories, we will not force any trade on the Aussie. So that's why we're not gonna trade Aussie until we have the clear sign of trend. That's why I write it here, conflicting, and we're not gonna trade Aussie. Okay, New Zealand dollar USD. So here we have New Zealand dollar USD market has been consistently behaving below the blue moving average line. Leg size is nice compared to other directional legs. It is considered the nice, and currently down leg is forming, and we just need the market to retrace at least the 50 to 60% good zone here. Then we will start selling USD. Okay, let's write it down. New Zealand dollar USD, trend is down, leg size is nice, and our decision is to wait 50% retracement. Alright guys, so what do we see overall? So last few 3 months, market has been, USD index had a downtrend overall. USD was weak overall, and we read it correctly and selling USD and made a good profit. Now the trend has reversed. My existing trade hit the stop loss according to my system, which was a really good, perfect execution on my side, and I lost the calculated 1% of my balance, which is completely normal and calculated. Now we're gonna position ourselves to buy USD, and most of the markets are revealing that USD is indeed getting stronger, and we just need the market to retrace into good zone on Forex pairs. Then we will start buying USD. Alright guys, thank you guys watching. See you guys next time.